Welcome back to the podcast, folks. I never do this. I don't do price predictions. I don't do it. It's not a hedge against being wrong. People do it every day. They are wrong every day and still do price prediction videos every day. I don't do it because everyone else is doing it. And honestly, I don't want to be like everyone else. That was never the intent of this channel. I know people like graphs, and it sells very well on YouTube. I don't do graphs. I tried it once. It put me to sleep and probably put the viewers to sleep also. I don't care what the price is going to be tomorrow because it's meaningless when it comes to a long token like AMP. And it is a long token. If you understand it, you know its value is determined by time. But I keep seeing the same old on the Reddit, on the forums, comments on my videos, and I would like to try one more time to put it to bed. And if you manage to stay to the end, this is what you're supposed to do on YouTube, by the way. If you manage to stay to the very end, I'm going to give you a price prediction. That's right. I said I wouldn't, but I will. That's what we're talking about today. It's putting the half cent and 1 cent gains just completely to bed. So please stand by, folks. When I go onto the Reddit, the AMP Reddit, which is quite good, by the way. If you haven't went to that forum, there is lots of information there and not a whole lot of memes. But I still see quite a bit of the AMP to $1, AMP to the moon. We're up 0.05 cents. Happy days are here. And that's fine. It really is. Reddit is supposed to be fun. But it makes me very introspective when I see these posts because it makes me aware that the majority of the investors in this project don't know this project. They don't understand it. Now, I'm not sure if that is a crypto thing or a community thing. It's probably a support group thing, if I had to put a pin anywhere. If you're in an investment and you don't know what you're in, you are going to want the warmth of confirmation that you made the right decision. So you post, you get the thumbs up, hold, the diamond hands thing. I made the right decision. Or maybe it just salves the wound a bit when you lose money if others lose money with you. I don't know. It's a crypto generation now, and maybe this is just how it is. Maybe someone called me a boomer before. Maybe that's absolutely true. I've said before that investing is about character and the ability to know and believe that whether you're up or whether you're down, this too shall pass. That's how it works, man. That's exactly how it works. The highs don't last, and the lows seem to go on and on. That's why it's about character. That's why it's about resiliency. Live in the now and live in the future at the same time. The merging of the pragmatist and the idealist, a true investor. And it's double tough, man. I'll tell you what, it's work. You have to live it if you want serious gains. Unless, there's a caveat, unless on the rare occasion, the once-in-a-lifetime occasion, you run into something like AMP. In the interest of full disclosure, I should not be doing this video. Tyler should be doing this video. A much larger channel should be doing this video. A channel with reach, a channel with respect should be doing this video. But it's just little old me down here, so I will do my best, and I hope it works out. I've spent the last few months talking up AMP, almost exclusively, to the detriment of my little channel. I have become a one-trick pony. AMP. That's all you seem to get from me. I'm in several other projects, and they are also forward-thinking projects, but I just don't get the butterflies like I do with this one. So it gets the bulk of my time. I also love Scale, Anchor, NewCipher, Bat, Orchid, tokens. I like tokens. But I wanted to take this one to put the low-level price variance to bed and give some confirmation bias, which I never do. I don't do price predictions, but I'm going to give you one in the fashion of the podcasts. I'm going to try and sell you AMP. You ready? I'm going to try to sell you AMP. But we need a little history first. Flexa is not a crypto company. They are a company that uses crypto. They use crypto on their network, which is a payment processing network, because they could not use their method with anything else. Nothing but crypto would work. They are doing something with their method that has never been done before. They are protecting merchants. They're protecting merchants. They are taking the burden of fraud on themselves and off from the shoulders of the merchants. The large chains, which can absorb the losses, and the mom and pop shops that just can't. They are taking that risk on themselves because they are the first and only network that has found a way to deal with it fairly. Nobody else. Not Visa, not MasterCard, not Amex or Discover. Nobody. No existing pay rail is doing what Flexa is doing. And this is not in the future tense. They are doing it right now. It's already in place, and it's growing every day. But AMP is this from a Reddit last night. But AMP's only at 0.58 cents, and it's falling. All right, I get you, man. I get you. It's a little scary. But you know what? Let's press on just a little bit. Usually, one would have to commit corporate espionage to figure out how Flexa is doing it and why it's going to work. They tell you. It's right in the white paper. They tell you. Hypothecation. That's how it works. I'm not going to drill down into that. I did it on another video, and it did not do well. So I'm going to nutshell it and say that the idea is absolutely revolutionary for small-scale transactions. Visa can't do it for small transactions. They just let the merchant or issuing bank eat it. It costs them too much to try and recover it. But Flexa found a way. And if you want to know the nuts and bolts of why it works, you know what? Dig on my channel a bit. I illustrate it. But it is also precisely why the transaction size on the Flexa network is limited at this time. The network needs to mature and grow. And it's about spreading the risk for the bank. And if you're a stakeholder, I'm a stakeholder, you're the bank. I say thank you, Flexa. But as the network matures, fees are coming in, liquidity is purchased from the open market by the network itself, the network value increases proportionally, and the limit for the charges gets larger. They will up the cap. And they also lay that out for you. It's about protecting the merchant and the bank. You, me. You're welcome. But AMP's down. It's down, man. I absolutely love that. AMP's value comes from usage, not liquidity. This is not speculation on my part. This is absolute fact. And they lay it out for you. People are really having trouble coming to grips with this fact. But I'm not terribly surprised because this is a thing that has never been tried before, so I get it. In the crypto market, we are very accustomed to wild price fluctuations. It's the nature of the market and the nature of a market based on liquidity, and it is definitely the norm for a market that revolves around one major player, Bitcoin. The vast majority of the world does not understand crypto, and they don't understand blockchain. They have no idea that coins and tokens are different. They aren't even the same sport. But they do know that it is an exciting market, get rich quick, buy and hold, wait for the moonshot. And that very general knowledge is applied to a token like AMP, which absolutely does not work that way. There must be liquidity in the AMP market. There has to be. With no liquidity, you can't reward AMP stakers as there is nothing for the network to purchase. Currently, because it's in its infancy, there is a lot of liquidity on the market for AMP, but that's by design. The network hasn't matured yet. But as it does, the liquidity will dry up, also by design, which stabilizes the price and increases the value of the network. Do you get that? The network itself perpetually increases its value through usage and by purchasing AMP. Merchant fees come in, the network buys the liquidity on a 1-for-1 ratio, distributes the purchased AMP to the stakeholders as rewards. The network grows just like that. I wish it was more involved, but it's not. And for any of my regular guys, I know this is going long. Please bear with me. I'm trying to put this to bed so I can branch out my channel a little bit. I'm not getting away from AMP. It will still be the focus of all of my live streams, but I want to be a more rounded channel. So I digress. So we have covered briefly why Flexa works the way it works, why, in my opinion, it is revolutionary, and why, in my opinion, it is inevitable. We have covered why AMP is valued the way it is, why its value is tied to usage and not liquidity, and why it is seeing the fluctuations it is seeing at this time. Because people don't understand it. So after all of this ado, and I didn't time it, but I imagine I'm at the 10-minute mark at least. You know what? Let's get to my prediction. I don't base my prediction on market fluctuations or charts. They have nothing to do with AMP. What it is, how it works, or how it's valued. Nothing. If you want to short this one right now, if you want to scalp, I advocate for that as long as you are putting the scalp onto the network as stake. If you aren't, you're hurting yourself long term. So here's my prediction. I'm getting to it, I promise. If you are concerned about your portfolio value with AMP at a nickel, you don't understand AMP, and you are short-sighted in regards to this token. Now, if that method works well for you as a trader, you do you, bro. However you got to do, whatever you got to do to earn, do that. If you are concerned about the all-time high of just over 12 cents and wonder when we will get back there, you don't understand AMP. If you're holding to $1, and I see that a lot in the crypto world, hold to $1, then sell it all. I see that everywhere. But if you are applying that rationale to AMP, if that's your price point, $1, you are selling yourself short. And I think you are selling yourself real short. A 100 billion minted token market cap for a crypto might be a lot in the crypto world. But Flexa is not a crypto company. Is $100 billion a lot in the traditional payment processing space? Is it? Visa processes 100 million transactions, give or take, every day. MasterCard, about the same. Amex and Discover, close to that. That is every day. And Flexa is going after that market. And they are doing it better, faster, and safer. Visa Incorporated racked up $2.1 trillion in combined credit and debit payment volume in the quarter ended June 30th, an 11.1% increase from $1.87 trillion a year earlier on a constant currency basis. Think about that. So, a price prediction from the podcasts? I think I just gave you one, man. I think I just gave you one. Live stream on Thursdays and occasional Saturdays at 7 Central. Cheers.